You're listening to Biotech Hangout, a live and unedited weekly discussion of all the latest news in our industry with a group of biotech insiders. I'm Daphne Zohar, and my co hosts today are Bruce Booth and Eric Schmidt. For more information about our hosts and guest speakers, or to listen to the most recent episode, please go to biotechhangout.com. So, this is going to be our last Hangout episode this year, and it's a perfect time to review 2025 and put forth some thoughts regarding 2026, as well as touching on the latest news of the week. So, starting with the markets, after underperforming for years, biotech rebounded in recent months, and reasons include macro rotations, biopharma as an AI trade hedge, and more importantly, fundamentals, including greater clarity on drug pricing, biotechs launching drugs successfully, and M&A momentum. Capital inflows are spiking, and we hear of a risk on environment. With that said, the IPO market has not yet fully opened, though follow on activity remains strong. Eric, you were saying the last few follow ons have been a bit more wobbly. Tell us more about that.
Yeah, first, just a privilege to be on this last episode of the year with you guys. I hope everyone has a safe and happy holiday season and gets some rest in. I mean, in terms of the market sentiment, Daphne, it just sort of feels to me that we're stumbling into year end a little bit. Maybe for the first time in the last 3 or 4 months now, biotech has modestly underperformed some of the broader indices. And some of the good news that we have had, we've seen some initial pops in stock price performance, but a lot of these follow-ons have come right on the heels of such positive news flow and maybe diluted out the post-market deal performance, which has been mixed to negative in some cases. We had this week even a couple of good announcements. One from Immunome on their oh boy, their GACE inhibitor, and that was for desmoid tumors, and the stock was up relatively well, and then sold off into and after the deal, and another transaction from Kyverna. We may talk a little bit about this on their CD19 cell therapy for stiff person disease. Kind of the same reaction. Good first day of performance, deal comes and a sell off. So at least from where I sit, it seems like people just kind of want to close the books on 2025 and go home. This is, as you guys know, the first year in which you could actually lock in some positive stock gains, and the buy side just seems a little bit tired, a little bit, kind of done with 2025. So, hopefully we can sort of crawl into year end and preserve the big year that we've had. I know Bruce is going to talk about more of the year in review and maybe the tale of two cities, first half and second half of the year. But it just doesn't feel like it's going to be a particularly robust run into year end here. And the news flow continues to be pretty good on margin. It's just not seeing that kind of momentum that we had in October and November.
Yeah. Bruce, why don't you give your thoughts on the market and then let's go to your year in review, which was very thorough and nuanced as always.
Yeah, sure. So, I guess, Eric, because you live day to day in the markets, you're feeling fatigue. I have to admit, I'm feeling a lot more optimism, at least on the private side, looking at our public portfolio and looking at performance. It is definitely a year where the tale of two cities is a good way to describe it. I mean, the first half of the year, everybody felt depressed. The S&P was outperforming biotech by a large measure, but really post Labor Day, after some momentum in the summer, I think everybody was cautious that maybe that summer momentum would fade away, and as has happened in past moves, but it certainly has felt sustained. It's hard to believe that the XBI is at almost 124, staring at it right now. We haven't been at these levels since you know really the peak of the pandemic, which is really amazing. I think the drivers behind lots of this enthusiasm we've talked about on here on this hangout in the past, but M&A being a big part of that. I think the last week or so hadn't seen any M&A. It was nice to see Amicus this morning. Would love your thoughts on that one. But I've heard that there are other deals to be done or to be announced that are right on the verge between now and JP Morgan. That's not anything related to any privileged information. I'm just hearing chatter from bankers that there's still a lot of deal activity happening out there. Curious as to your thoughts on that.
In some ways, I think fatigue and this maybe sort of pause that we're taking is not a bad thing. So I actually do share your optimism, as I'm sure we'll talk about for the fundamentals of our group, Bruce, and for the outlook into 2026. I could probably even try and one up you there in terms of my optimism for all the good companies and innovation that we're seeing. But it's a good thing, right? That this rally has not been of the same substance as what we saw in 2021 and 2022, where everything went up in correlated fashion and in concert, no matter the fundamentals. So this market's very discerning. We've seen some mixed news. Companies like Pyxis, for example, or Nectar that had mediocre data, I would say, and those stocks were heavily punished in today's market. And again, we're seeing good news being awarded incremental value too. So I like this stock pickers kind of environment we're in. I think it's very healthy. I think where we start to worry and get concerned about the markets becoming a little bit frothy is when everything moves up in concert with one another. And that's not what we're seeing. So
Yeah.
I like the pause. I kind of like the consolidation.
Yeah, no, that's true. I think your comment of lots of paper. I mean, I just was looking at the monthly follow-on financings as we reflect on the fourth quarter. I mean, October was really a huge month. November was the second largest month in like 18 months or something like that. So we had 2 months back to back of, I think there was almost $9 billion of follow-on financings done between those couple months. December, will be less active than that as it traditionally is heading here into the holidays, but there's still been a reasonable amount of offerings. One question I have for you is sort of how do you guys think about the post market performance of these follow-ons, as a early stage longer term investor. I sort of don't think about these on the day after trading, the 5-day trading, or the 10-day trading. It's sort of, where do we think this capital will take the company, and where will it trade over the next year to 18 months? Curious, is
Oh,
that just
Bruce,
too
if,
is that too long term of a view that you guys in the public markets don't think about?
yeah, if only all of my clients were like you, it would be such an easy job. Yeah, I mean, unfortunately, the market has gotten even more short-termism with its evolution, and the past few years, and those first day or even first week statistics are so critical to who might be investing the next week. So it's crazy to say this, right? But if we have $3.5 billion of paper, like you pointed out, we had just last week alone, or one day last week alone, and that paper doesn't perform that well, I think it honestly impacts how people think about this week's deals. And I have one, I don't know, sort of discussion that's in my mind right now, whereas one of the insiders on a subsequent transaction said to me, well, because last week's deals didn't do so well, I'm going to need more of a discount this week. I don't want to take that risk into year end. Why would I give up performance? I know others aren't going to outbid me, so I'm going to leverage my standing as one of the few people who are willing to buy and take an ounce of pain from the company. So yeah, it's just the environment we live in,
Yeah,
and probably always will live in.
yeah. I mean, the follow-on market usually has to strengthen before any IPO market opens up, and I do think in general, the fourth quarter has been very positive for follow-ons, and so people often ask, sort of, well, how come we haven't seen IPOs come around? The reality is, by the time you commit to going down the path of an IPO, it's a 4 to 5 month process when you add in the lawyers, the SEC comments, the accounting, and so if things heated up, let's just agree that sort of post Labor Day, people started to feel like, hey, this might be real. Anybody that wanted to go public orging up then, they wouldn't be able to get public until January or February. And so I think in the next 3 weeks, we're going to see a lot of companies flip from confidential to public on their S1s. And we're going to see, a bunch of companies trying to go public in the first quarter of the year. Curious if you were betting, how many companies do you think will flip their S1s? Both of you. I'd love to put you on the spot on numbers.
I mean, I think last week or a couple weeks ago there were some predictions that ranged from 25 to 60 or something like that. I have no idea, but I think that what we're hearing is that there's a lot of activity.
Yeah.
So
Yeah,
Yeah,
for
yeah,
most of
I
the
guess.
from
Yeah.
I was going to say, Eric, and Daphne, one of the interesting things from Atlas's vantage point was we have whatever 40 something 45 companies in our portfolio, and over the last 10 years, almost any given time, there was always a couple companies with confidential S1s on file. And for most of this year, after Siona went public in the first quarter, we didn't have any on file. And I think that was a bit of capitulation on like the IPO markets aren't turning around anytime soon. I think that may be changing now as we start to think about financings for 2026. But it's been a lot of retrenchment in the private venture world around just raising money privately and doing more partnerships and not thinking about the IPO market.
yeah,
Now that that appears to be opening, I think you're going to see a lot of companies trying to access the markets.
yeah,
Yeah,
and I think we were also dealing with a lot of policy uncertainty, and I'm not saying we're past that. Actually, I'll touch on a few points in a second, but it seems like it's almost like people are used to that uncertainty at this point, and then you've got the positives like M&A and other things like that, which have been driving the positive
Yeah.
sentiment. Yeah,
Yeah,
go ahead.
I wonder whether is it desensitization on the part of all of us to
Yeah,
the volatility and macro drama, or is it a legitimate view that some of the bigger risks are fading away? I'd like to hope it's the latter, but I think it might be more the former.
yeah,
I
I,
was just going to touch on that point you made, Bruce, about the number of IPOs that are coming in January. I'm sure you're right. I'm sure Daphne's right. There's going to be a lot of them. I don't know the number either. I mean, in any normal year, about 25, 30 IPOs would be a pretty good haul for a full calendar year. But we
Yeah.
may see a good number of those, 10, 15, even in January. I don't know. My concern, honestly, isn't so much about the quantity as it is about the quality. You mentioned that there had been a bunch of companies that were gearing up in the even late 2024, but certainly early 2025 timeframe that kind of got stuck when the markets did turn down, when some of those early 2025 IPOs didn't perform that well out of the gate. And I worry that maybe some of those names are going to be recycled and will be some of the first to come back out, will be
Yeah.
the first to regain filing status and flip. They already have existing syndicates. They already have S1s that just need to be updated. So we've talked, I
Yeah.
think, about this in other forums, but yeah, it's really critical for our industry, all players involved, including analysts, bankers, VCs, et cetera, to make sure that the bar is very high. Otherwise, we are going to see a potential repeat of the past.
Yeah. I mean,
yeah. I'm
this
curious,
is where
Bruce.
I was going to say, Eric, you and I and Josh spoke about this before Thanksgiving on your podcast. The trouble is, the animal spirits take over, and everybody is incented to take companies public. It's bankers making 7%. It's accountants. It's lawyers. It's the DNO insurance provider. Like everybody wants you to go public. Management teams can start their 10b5 plans. VCs have a path to starting to trade out of stocks. Like it is just everything works in favor of sort of irrational exuberance when windows open, which is why for the first 35 years of biotech, it was feast or famine. The window would open, you'd have a couple quarters of lots of companies, and then it would shut down for 3 or 4 quarters. From 2012 until really through the pandemic, we didn't miss a single quarter with there was always some companies able to get public in that period of time. We obviously went through a pretty prolonged dry spell in the last couple years, but I suspect if the markets do open, there will be a mixed quality group that investors will have to discern and pick which companies to really back, and there will be a lot that don't work out for the best. But I think that's the nature of the way capital market cycles, you know, the dynamic of the capital market cycles always work.
Yeah. So, Bruce, I want to ask you. Everybody's incentivized, but those that have already been through these cycles, management teams that have taken a company public and had it be very thinly traded, trade down, waiting for milestones. Companies, investors that put in money and then can't get out because of liquidity, and seeing again having to write down the investment and so on. So, how much do you feel like the positive incentives are offset when you have a very experienced group of people around the table? I'm talking about companies that aren't like the top tier companies. I'm talking about like the companies that Eric was referring to earlier that are sort of struggling and then they had to do another round. Maybe that was a down round and now they're waiting and they're going to push out.
Yeah. I
Yeah.
mean, certainly tired companies that can't get capital privately, we've seen some of those try to get public in the past. I do, back in October when I was doing some of those 20-year reflections, I had the reflection of like, if you can stay private, my advice is always you should stay private. If you can raise capital, if you can do deals, if you can continue to advance your medicines without having to deal with the public markets, you're much better off for it. And when it comes time to negotiate an M&A deal, you're in a much better position, when your public stock is not anchoring you at some valuation that you really don't want to start from.
Hmm.
And so there are a lot of reasons not to go public. The unfortunate thing is there aren't really growth capital providers in the private world in biotech. We don't have private companies like on the tech side that go public at or are private companies at 10, 20, 30 billion dollar valuations. That's just not a thing in our space. And so these
Hmm.
companies, if you really want to scale into big clinical programs, when you need to drop $500 million in single clinical programs, you have to go public. There is no, private market for that, and so there are a lot of incentives that push companies into the public markets rightfully around funding those later stage things. It's especially for earlier stage companies. You're in phase one or phase two. Asking yourself, do I really need to be public? And only in the scenario where you can raise money and raise money without the headaches, you know, I generally am more cautious about going public than not.
Yeah. So we wanted to touch on in your annual review, you talked about macro and policy and the impact there. So let's talk about a few policy updates and then come back to the question that you asked earlier, which is, are we just desensitized to it or do we have kind of more comfort with the risk level? So I'll go first with a few updates, a few things I'm hearing from DC. So the White House is set to announce more MFN or most favored nation pricing deals with major drug makers, similar to the earlier agreements we saw. What I think is a little concerning is we're hearing that the White House would like to use these deals to serve as a framework for a blanket policy across all biotechs. So obviously, this would be disastrous for all of biotech, even those companies who've negotiated deals who've emphasized that MFN remains a serious threat to them. Now, the deals are not exactly, I mean, they don't have as much teeth as, and they're not as concerning. And that's been, I think, reassuring to people. However, if deals that were done with large pharma companies then get spread across the industry, small and mid-sized companies might have completely different considerations, and they would be potentially really harmed much more. And the impact on our industry, on patients, our leadership in biotechnology could be quite massive. Now, how big of a threat is this? We don't know yet. Um, the other kind of policy thing that I think is a big concern is FDA staffing. So we all saw the biospace piece where they talked about the heads of divisions, but FDA staff in general is at 2016 levels. So 4,000 employees or 20% of the agency has left. Doge fired the HR agency for the agency. And what we're hearing is that there's been no new hires in 2025, actually only transfers. FDA have been trying to get contract HR, but that's being held up at HHS. And for context, it usually takes 1 year to hire and 2 to 3 years to train FDA staff. So, how does that impact our industry? Well, obviously, companies are saying that FDA is delaying or denying meetings. Regulatory experts are also concerned about what I think you could call it the policy by podium or policy by press release approach, which has been taken by FDA. they've been changing a framework and then announcing it through the press release, they don't appear to be following the previous process that involved rulemaking and input from industry, et cetera. And then I'll just touch on a couple of quick positives, and that is the U.S. secured trade deals with Japan and South Korea that lower tariffs to 15% in exchange for a combined $900 billion from Japan and South Korea in investments targeted towards strategic sectors. And initially that was AI infrastructure, energy, semiconductors, but now biotech is included in that and pharma supply chains. And what we've been hearing of a few large, very large proposals coming in from industry investor groups. So like investor syndicates plus industry experts for US based contract manufacturing that could be funded through this mechanism. And then one last positive is that HR 1262 or the Pediatric Priority Review Voucher passed the House and will likely cross the finish line in January. And this could renew the PRVs for rare pediatric disease research through 2029 to incentivize development of treatments for childhood cancers and other conditions that otherwise would not be addressed. So now I'm going to go to the discussion, but I want to frame it in the midst of this backdrop. The New York Times had a very good piece this morning, which we'll share through our posting, which suggests that there may have been a coup attempt against Makary, led by RFK. And that perhaps as a counter to that criticism, Makary shared a post this morning highlighting what he views as wins of FDA under Trump, including a few undeniable steps they've taken, like removing food dyes, HRT, incentivizing domestic manufacturing, publishing complete response letters. And then he has some other statements in there that are more questionable or have been press released but don't really seem to be happening, including, quote, meeting all target date goals, reducing decision times from 1 year to 2 months, and eliminating animal testing, which, I mean, that's clearly not, these are not things that have been done. They've been maybe talked about. So we're going to share the post, but I want to turn it back to the two of you, perhaps on the decision timing he's referencing, the PRVs. I'm curious to get your thoughts, Eric, on everything to do with the policy environment, but in particular, the political nature of FDA and how that's impacting investor sentiment.
You were very kind and professional, Daphne, in your synopsis of what's been going on in Washington. I probably would have had a few more choice and maybe combative words, but yeah. In addition to everything you mentioned, I think the commissioners' vouchers have also come under a little bit of scrutiny this week. I proposed this topic for discussion before the Stat News piece came out today, but as there were a few other commissioner national priority vouchers that were handed out to drugs like Merck's oral PCSK9 and J&J's bispecifics. And a lot of us have sort of been scratching our heads, well, why that drug and what's in the national priority scheme that has to do with those handouts. My take is that Makary is under a lot of pressure. I don't think he's done too many things right, to be honest. One of the few things I think that he's gotten some credit for are these commissioner vouchers, which seem to appease everyone. It's almost like, just handing out candy to people who have been treated harshly otherwise. And I think it is very political. I think the rationale for the CNPVs is a political one. There doesn't seem to be any rhyme or reason in the science. It seems to be coming top down from the commissioner and maybe Vinay Prasad. And let's face it, I mean, this just isn't the same FDA that it used to be. This is an FDA where the senior leadership team has gotten extremely involved with drug reviews. At the end of the day, you either please Vinay Prasad with your drug review or you don't. We have a stock today in Disc Medicine is down about 15% when I last looked because as Stat News was reporting, Vinay Prasad may not like their drug, even though it was granted one of these commissioners' vouchers. So I don't know. Again, there is no more FDA as we knew it. The place is in shambles, as you laid out. The teams have turned over from a senior and junior staffing level. And I think, unfortunately, it's going to be hard to resurrect that until we get rid of not just Dr. Makary and Dr. Prasad, but others who might be protecting them. I didn't see the New York Times article. I'm surprised to hear it called a coup because I would have thought that Makary would be out as soon as RFK wanted him out, but maybe that's not the case.
Yeah, I've been talking with colleagues, and people have been critical of Macari, and I'm not defending everything he's done, but think it would be worse for our industry if RFK stays and Macari's out, because who would he replace him with? That would be my biggest concern. Is at least Macari, like, he understands the industry, is willing to engage, and has done some things that are reasonable. But I, I don't think he's perfect, but I think that it could be much worse.
Yeah, I would just say this on the FDA front, the separating the noise and all the chaos at the senior leadership levels from the day-to-day functions of the FDA. Our portfolio, again, 45-ish companies. I've talked to heads of R&D and pharma. A lot of drug programs that are interacting with the FDA are getting the feedback they need within the timeframes that they need. We haven't seen material delays across the board. There are always case examples of where the FDA is changing the goalposts or moving them or doing things that are different. Right now, we blame that on political chaos. But even in prior administrations, you have the FDA sort of approving drugs that hadn't shown that they worked, or not approving drugs that clearly work. There's always some drama around selected case examples. But I would say the underpinnings of the FDA, where all the FDA reviewers, I am just really happy that they're doing their jobs, and, kudos to them for being able to keep their heads low enough to avoid the chaos in the senior leadership, which is clearly distracting to those of us who are, watching where the industry is going. But from a day-to-day R&D perspective, I haven't seen wholesale, delays in the way we're advancing, our medicines into the clinic, and it through end of phase two meetings and such.
Yeah, and maybe that's the reassuring part, that things are still functioning. So I think RA and No Patient Left Behind did a survey of biotech companies, and it was something like 25% were seeing delays and things like that. But I am hearing that there's definitely an uptick in denying meetings and things like that. So we'll see. I agree with what you just said. And Eric,
I was surprised to see
yeah,
that tweet this morning, which I also caught my eye. He said that
yeah,
they're onboarding 1,000 new scientists was one of the check boxes.
yeah.
My understanding was it was nothing but shrinking over there. So if they're really onboarding 1,000 new scientists, that's a surprise piece of news to me.
Yeah, so I mean, they've reduced their staff by 4,000. I don't know how many of those are scientists, and I think the 1,000 refers to they got approval to hire 1,000 new scientists. I'm not sure if they've actually hired them,
Yeah,
but that would be good news, I think, if they had.
yeah.
S-
I mean, you
Eric,
mentioned, Daphne, just
sorry.
coming back to
Yeah,
some of the macro points you made on
yeah.
on MFN. This could go in so many different ways, and I hate to be too pessimistic on it. So I would say the optimistic view of that is that big pharma is really exposed with legacy products to the MFN challenges, where you've already established prices in Europe that are much lower than the US, and they become the reference price. That's challenging to navigate your legacy portfolio. But on a go forward basis for new medicines, which is where biotech generally plays, the damage from MFN, while of course it'll ripple through, if pharma is in pain, biotech generally is in pain. But the idea of new products being able to set sort of a GDP adjusted global price, and you won't launch in countries of Europe that don't give you a sort of reasonable GDP, balanced price relative to the US price. You know, I,
Hmm.
I actually think that's probably a good thing overall. Like, we have a messed up global drug pricing regime, and have for 40 years, where the US was essentially subsidizing prices everywhere. And that can't continue. So I'm in favor of making sure that new drug launches in the developed world do have a relative MFN, meaning GDP adjusted. We should be launching drugs in the US for the same GDP adjusted price in France, Germany, Spain, all of these relatively developed countries.
Yeah, I agree with you. And I think one thing that I've seen is that some of the industry organizations and the large pharma companies have taken a tact of let's fight this via the legal or lawyer the lawyers in those companies and in those organizations don't want to appear to be agreeing. But at the same time, I was in Washington meeting with both the administration folks and also legislators like members of Congress and others. And I feel like there's a lot of openness. So, like, we all agree that this problem exists. Why not put forth some solutions, some ideas? And the reason that hasn't been a proactive move by the larger companies and the industry organizations is because they're still trying to, I believe, ensure that they're protecting their legal rights. But at some point it would be good for us to put forth like what's a proposal to solve the problem as opposed to here's the problem, we're going to do mfn pricing and there's other ideas that have been floated that I think are much better.
Yeah, no, I agree with trying to find solutions to this problem, not just fighting it.
Yeah. Okay, so let's keep moving. Eric, you have a couple of items to talk about. Another one related to RFK Jr. And the American Academy of Pediatrics, and then let's talk a little bit about the new Vivek Ramaswamy company.
Well, yeah, I'm not sure I can do this other topic a lot of justice. Look, the anti-vaccine stuff continues to plague this administration and RFK Jr. I actually saw some headlines even from Fox News saying that some of these anti-vax rhetoric was hurting the population and American health. I think we're at risk of losing our vaccination status against measles and other things like that. So the headlines continue to be very vicious with regard to this aspect of the MAHA movement. I think the article you referenced, Daphne, was about the American Academy of Pediatrics losing its funding after criticizing some of the anti-vax statements and activities on the part of RFK Jr. Yeah, no surprise. I mean, par for the course. We know that RFK Jr. is going to do everything he can, honestly, in order to weaken the arguments made by the scientists who support vaccines. Another article that was kind of interesting was Paul Offit, who's a professor at Penn, had been asked to debate the science behind vaccines, pro and con, with some anti-vaxxers. And I think he had been even offered $1 million, and he said, "I'm not going to do it." And he published his rationale for why. You can't debate science with people who don't believe in the rational scientific hypothesis, don't understand the differences between causative effect and association. So I don't know, just more of the same. I know we've been talking about this on this program now for many, many months, and apologies for kind of rambling on here, but I guess it's just fatigue again, and maybe sadness on my part that we're going to end the year, a full year of RFK Jr. in charge of continuing to take apart our vaccine industry and our public health efforts.
Yep. Did you want to talk at all about Vivek Ramaswamy?
Why don't you cover that, Daphne? I know you're very familiar.
Oh yeah, I'm actually not. It was just on our list of news from the week. So we can skip that. Actually, let's do this. We have data and then we have the best and worst CEOs. I would suggest we'll jump to the best and worst CEOs because I think that's a really interesting topic. And we'll end with the data. But Stat put out this best and worst industry CEOs list, and we'll link to it. And I'll describe it, and then I'd love to hear from both of you because you've both touched on the role of luck with the best CEOs, and would like to kind of talk about that. So the list, basically, the best list highlights big deals, good data. That's followed by stock price appreciation, and they even gave kudos to companies or CEOs of companies that acknowledged a setback and returned cash to shareholders. The deals in particular were notable when I think it was like nearly 240 billion in acquisitions were announced or closed by November, and this is one of the most active M&A environments since 2019. I also like the fact that women CEOs who led many of these M&A deals were highlighted. In addition, Stat put out their worst CEO list where they highlighted CEOs who made choices that ended up being less favorable for patients. So I'd love to talk to you about, it seems like you could just pick a point in time and you might have the same people on opposite lists, just based on luck. But obviously, there's some people that are, executing well, outperforming, and others that are making poor decisions. Let's talk a little bit about this. Eric, you guys put out a really interesting piece. So why don't we start with you and then go to Bruce?
There's so much to talk about on this topic. So thank you for bringing it up. We could probably spend a whole hour on just this. First, just this celebration of best CEOs. Yeah, there is, I think, a lot of luck involved. And you mentioned people who were, I think, on last year's naughty list made it onto this year's nice list. I'm pretty sure, the same people wouldn't change that much in 24 months. So should we be celebrating, good fortune and luck? Is how much of a drug success truly relates to the singular individual who's running the company versus, the CMO or the chief scientists who are making the drugs and developing the drugs, or just Mother Nature in the end of the day, who decides whether a particular molecule is going to look a little bit better or worse than another. So success is great. It should be, given its due, and we should all bask in the glory that our industry is producing on behalf of patients. That's critical to our industry. But I think some of these year-end lists sometimes, overdo some of the appropriations. And I guess in particular, M&A is interesting story. Should we be celebrating when a company achieves, an M&A exit, selling itself to a larger company? Oh, maybe. I mean, it's a good outcome for investors. Most deals are done at a premium. But on the other hand, we're losing a lot of great companies through the M&A process. Some of the companies that were acquired this year could have become biotech's leaders over the 5, 10, 20-year future. So I don't know that M&A in and of itself, constitutes a success. I think it constitutes a financial outcome in the short term, getting back to that short-termism in the marketplace. I'm not just sure we should be applauding all M&A events. And then the piece that you referenced, well, you know what? Let me pause and let's bring Bruce in, because I know he's thought and written a lot about the role of luck in this.
Yeah, I mean, look, I think the role of luck, is a force that a lot of us don't want to recognize, but it is just true. Science and biology, and bringing drugs, through that challenging, especially middle part of the clinic into the market. Luck plays a huge role, and we end up worshiping the sort of winners in this, and sometimes they've just gotten really lucky. So and that holds for both operators and investors, I would say. And so I think you just have to be super humble. I like the celebration of best and worst, but you could kind of predict. I think 7 of the best this year were all in the deal maker camp, because we've had a gangbuster year for M&A. So there's a lot of people on there that deserve credit for having driven those deals. But in a world where deal activity wasn't happening, would you still put them all up there as fantastic CEOs? There's a lot of other things that make a great CEO. And
Can
I
I
think,
put? Can I push? I want to follow up on this M&A point because both you and Eric touched on it. This idea of M&A, like if you think about incentives, coming back to what we talked about earlier, for a CEO and probably for investors and others, it's like the gold medal. Like there's almost nothing else you could do that would just satisfy everyone, make everyone happy, and like the investors, your patients, you're going to have the drug, you're going to know that the drugs are going to get to patients and be commercialized well, assuming depending on what stage of development. In terms of your investors, you're going to make all of them really happy. You can like take a break if you're going and building a company. I'm not saying that this is like how every CEO thinks, but building a company, then you're building it, then you've got to launch, then you've got criticism, they're not growing fast enough. So let's talk a little bit about that and the incentives around M&A.
yeah, I mean, I take a slightly different view than Eric, that
I think M&A is a great outcome for a biotech company, in part because if you think about where overcapacity exists in our industry, it's sort of big pharma sales forces that deliver drugs, distribute drugs to patients, through the channel, the sales channels and such. The last thing we need is for a young biotech company to think, I need to build that entire enterprise myself in a world where we have overcapacity there. These balance sheets of large pharma are full of cash. It's very hard to escape the gravity of those balance sheets. And so I see it as sort of a natural progression of the ecosystem where great companies with great assets are going to be acquired. Those great drugs are going to make it to patients, through the global distribution framework of a large company, and that creates value for everybody. The sometimes companies have done deals that keep them independent, and they turn out to be great outcomes. You take Regeneron with their deal with Sanofi, you take Alnylam with some of their deals as well, like turned out to be fantastic standalone companies, but that's very, very rare. Most companies end up, not being able to escape the gravity of a large pharma balance sheet. And I think that's actually a good way to recycle capital, teams, people, back into the ecosystem. It's very different than the tech side, where a lot of these emerging businesses are actually funding themselves because they do have revenues, many of them have earnings, and yet they're still growing. We generally don't have earnings for as far as the eye can see.
I generally agree with Bruce, but for the purpose of conversation, I'll take a slightly different tact here, which is I think in some cases he's right, and in some cases I think M&A can slow down progress and be bad for patients. So, Daphne, you said you thought M&A was always good for patients, and I guess
Not always, not
or,
always.
or could be
Yeah, it could be.
good. Yeah, look, the two largest companies in my universe that were acquired this year, one is Cidara, the other is Avidity. Cidara fits very well into the basket of companies that Bruce just laid out. They have a flu prophylaxis. It's going to be distributed on a mass marketed basis to millions of individuals, and their acquisition by Merck, I think, will help the commercial rollout, the manufacturing, that distribution, and benefit society in a way that little Cidara could never do. The other company, Avidity, they were focused on rare muscle diseases. They had an absolute execution, get stuff done kind of mentality, a very aggressive approach to development, a very aggressive approach to regulation at the FDA, going in with biomarker data in indications like FSHD, and really holding the agency's feet to the fire to get this product approved as quickly as possible for patients. And what's happened since Novartis has taken over? Timelines have already shifted. The base case is no longer to get approval based on a validated biomarker, but to potentially wait for clinical data that could come 12, 24 months later. So just one quick example of, sometimes patients do lose out in some of these transitional periods.
That's a very fair point.
Yeah, there's no doubt that does happen, and big pharma bureaucracies do, or trade-offs that they're making around getting approval with a full clinical package versus an accelerated approval on a surrogate endpoint, and the marketing ramifications of that. Those are all real issues.
But Daphne, you mentioned something else, a piece that my colleague Josh Schimmer had written also earlier in the week. Maybe I'll touch on that. That is to celebrate the losers here. We're a winners culture. Winners get so much praise and limelight, and again, for good reason. Oftentimes, winners have shepherded their products through to de-risked endpoints and success financially, and deserve some of that praise. But on the other side of the coin, there are a lot of wonderful people in our industry who have pioneered new pathways that didn't necessarily lead to success in the end. Maybe they got a little bit unlucky. Maybe the markets weren't quite as receptive, or the drug profiles didn't quite match what was needed at this point in time. But nonetheless, they laid the groundwork. They were trailblazers, creating a route, a possibility in the future that others are going to maybe more successfully tread down and succeed upon. And I've got a couple of people in my mind, but let me give a shout out to the guys at Bluebird Bio who had developed this drug for sickle cell disease, Lyfgenia, a very complex invasive cell therapy. I think they have probably known for some time that the drug that was approved in late 2023 was not going to be a particularly strong commercial success. It's too complex and invasive, and reimbursement continues to be difficult. But boy, the unmet need in sickle cell disease is about as meaningful as you could see in any indication these days. And to their credit, they really stuck with it. I mean, despite having a terrible balance sheet, laden with debt, despite not having the profitability that was ever going to support success at this company, this management team led by Andrew Obershen, they saw it all the way through to a private acquisition. I don't think they made a lot of money themselves personally, but because of their persistence, this drug will be still available to patients on an ongoing basis, and hopefully behind Lyfgenia will come other drugs for patients that are a little bit better. So why shouldn't he be one of the best CEOs of the year? He in some ways deserves as much praise as anyone else on the list.
Yeah, first of all, kudos to you for highlighting these examples and this industry. I mean, think about the success rates are so low that there's many very talented, great management teams that have just had bad luck, or they haven't been able to raise money at the right time. It's just the timing issues. So kudos for you for bringing it up. But I think ultimately the industry is fueled by investors, and if the investors lose out, it's hard to celebrate, even when patients benefit. So I agree, and I think it's really important to highlight. Were there other people you wanted to talk about?
Well, again, I think we've touched on the theme of just randomness and luck.
Yeah.
And maybe the issue that we're all kind of circling around with these lists is it's really hard from the outside for me in particular, maybe for you who operate on the inside, or Bruce who sits on a lot of boards. You can kind of, go through your notes and say, well, this was a good decision. This was a bad decision. This is something we control that we could have prevented, or this is something we controlled that we ensured the success of. But for most of us, honestly, who operate on the outside, we have no idea who's a good CEO and who's a bad CEO. We have no idea about these decisions and what could have been done differently, because we're operating with more than full set of facts. Sorry, less than full set.
Yeah, I do think that the decisions point is a really good one, and we've talked about public company CEOs here because that's out in the full light of public disclosure. But a lot of private CEOs, I would say, some of the best CEOs aren't necessarily the ones who've had successful outcomes. Making the right decisions to shut programs down or shut companies down, it's a super tough decision. But I have to say, I've worked with a bunch of CEOs who've come and said, the tox signal here on the target is, that is not, it's on target and we're not going to be able to work around it. We should shut this program down, even if it means shutting the company down. Those kinds of very candid, truth-seeking decisions, I think, are highlights to me of great leadership, and what definitely worth celebrating. But it's very hard because it's done in the shadows of private companies, where these decisions get made, and it's easy to look back through the Monday morning quarterback and say, where did we make decisions wrong? But when you're seeing it happen real time, there's a lot of great leaders in our industry that are making good calls to shut things down when it might not actually be in their apparent best interest to do so.
Yeah, and that was one thing I did really appreciate about the list that Adam put together, is he did call out one example of a company shutting down and returning cash to shareholders. And I think last year he might have talked about, is it Amylyx? But I agree with you, and I do think we need to do more of the recognition of those types of tough decisions. So did you guys want to talk more about this
Well,
best
Daphne, I was
worst
going to
list?
ask
Yeah.
you,
Yeah.
you obviously have been in operations for a long time, and you deal with a lot of us in the public markets as a CEO that's potentially open to criticism, to open to being on such a list. How do you feel? What do when you get judged by the outside world, what do you think is fair and unfair?
Yeah, I mean, I think that for me, the truth seeking part of it is really important. Building the teams, meeting your timelines, meeting your milestones, doing what you said you would do, while keeping patients at the forefront. I think those are all things that a CEO that is executing well will do. I also think this idea of being open to learning, saying, "Hey, what did I do wrong there? Like, what am I not ever going to do again?" And when you see that in a leader, that's usually a good sign. So the openness to understanding what you could do differently, and in my case, I've had both success and also setbacks, and I try to learn from both. But I think that these lists, in some ways, I have mixed feelings about them. I think this particular one was done quite well. It was pretty nuanced. These lists were. I don't like the ones that are just like, oh, these companies raised a bunch of money, so let's put them on our best list. And there's a few of those that go around every year. But it's nice. It's helpful to recognize. But I agree. Like, I think there's so many people involved, and it's never just the CEO. It's usually many people on the team, and so whenever one person is like sort of taking credit, or I always get very skeptical about that. And I think it's usually a negative sign when somebody's like putting themselves forward all the time. Anything else on this topic? Bruce, do you want to say something?
Nope. We can move to the next one if you want.
Okay, so we had a couple of data readouts. I think you, Eric, wanted to talk about Kyverna, and I didn't know if you wanted to talk about Nectar. You touched on that briefly before.
Well, I mean, I could if you want. I mean, I don't know. I think Kyverna is potentially the more interesting clinical data set these days. The Nectar data set's a little bit mixed, but I think the Kyverna data set, at least as far as I see it, is a clean victory for them and for cell therapy and for this rare condition called stiff person's disease. This is an autoimmune disease. We're not quite sure about all the etiology and biology behind it, but Kyverna has now shown with their cell therapy directed against CD19. So this is a autologous bespoke medicine. They treated about 25 or so patients and compared those patients pre and post treatment to their baseline characteristics, and I think saw really compelling, universally positive data showing improvements in things like walking ability. So there aren't a lot of patients with stiff person's disease, probably only about 2,000 or so in the United States that have sought out therapy for their condition. So it's a small market. I'm sure the drug will come at premium pricing. I would hope that despite the relatively small single arm nature of the pivotal study, that the FDA would choose to review and approve the medicine. Could be potentially one of the smallest data sets we've seen for a cell therapy approval. Usually you have to get about 100 or so patients worth of safety data, but in this case, again, substantial unmet need, very modest sized population, and seemingly quite good data. So hats off to the Kyverna team. I think this could be the very first cell therapy ever approved for an autoimmune disease. And of course, there's a lot of optimism and hope that this won't end with stiff person's disease, that we could see Cabaletta and Bristol Myers and others take on some larger indications as we go forward, myositis, myasthenia gravis, maybe even sarcoidosis. So we'll see, but there's a lot left to be done here. And this could be a new start to a whole new therapeutic category and opportunity.
Thank you. And we touched on it briefly at the beginning, but I think um, congratulations, obviously, to Amicus Therapeutics on the deal with BioMarin. So BioMarin is going to be paying 4.8 billion in cash for Amicus, and this is a very, I think, inspiring story of John Crowley, who developed, started Amicus to develop a drug for his children and his family. And I think it's very much in line with the patient focused and family driven nature of the leadership in our industry. So, congratulations to them. I don't know if you guys have any comments on this. I just am looking at the news right now. I didn't see it before the show.
No, look, a great company, and the story of John being a parent, starting a company to help address the disease that his kids had, Pompe. Just tremendous 23-year or something, 25-year journey. So the
Well, yeah, going back to our other conversation, this is one that you're right, Bruce. This is an amazing story, amazing narrative, how a family started a company and created multiple drugs to treat unmet medical conditions. And yet, from a pure stock standpoint, if we're going to put on our investor hats and be capitalists, it was not a particularly good outcome, right? This stock has been kind of range bound in the $10 to $15 range since it went public about 15, 20 years ago almost. And investors never really made much money. So great
yeah,
outcome for patients, great outcome for, I think hopefully the employees and the management team to some extent, but not so much for investors.
yeah, no doubt. I looked this up this morning. So they went public in May of 2007 at $15 a share, and they got bought today for $14.50 a share. And yet the market cap went up 13-fold or 15-fold over that period of time. Right? It was a 300 post at the IPO, and it got bought for 4.8. Really interesting reflection on the dilution to build a story like this over that many years.
Yeah, and there's a movie, by the way, called Extraordinary Measures about John Crowley. It's with Brendan Fraser and Harrison Ford and Kerry Russell. So anybody who wants to see the full story, that was done in collaboration with John, who's telling me about it. Sounds like a really interesting story. So we're getting very close. Any last minute predictions for 2026? I know, Bruce, I think you're now in the lead on this XBI prediction contest. I was in the lead for about a minute. Yeah.
Yes, Daphne and I had a dinner back in October when the markets were just starting to warm up, and it was, where will the XBI end? And Daphne was at 120. I was squarely the over optimist at 130. We had most of the group between 110 and 120, but we'll see.
Yeah.
Fingers crossed for a strong finish
Okay.
here,
I'm rooting for you, Bruce.
despite what Eric was saying
Bruce,
about the
what
soft.
Bruce, I want to know what your end of 2026 number is.
Ooh.
Yeah, that's a much harder question.
All right, we'll give you some time to think about
Yeah.
that. In the meantime, I'll mention that Biotech Hangout will once again be hosting our in-person networking event at JP Morgan on Tuesday, January 13th from 7 to 10 p.m. at Persona. We hope to see everyone there for a fun night. And we have an open bar thanks to our gold badge sponsors, CFGO and Incubate Coalition, and our blue badge sponsors, FTI Consulting, Catalytic Agency, and MISPRO. Be sure to RSVP. Last year we had about, I think, close to 1,000 RSVPs, and a lot of people cycling in through the night. Sadly, out of all of our co-hosts, Bruce probably won't be there, but many of our co-hosts will. Hopefully, Eric, you'll join. Josh always does.
My thoughts will be with you guys.
I still remember that piece Bruce did about the candle and JP Morgan and not going anymore. So yeah, sadly you won't be there, but we'll miss you.
I'll
Uh,
miss not
yeah.
being there. It's the one part of JP Morgan I really liked, was the ability to see friends that you hadn't seen in ages. But
Yeah. Okay. Any closing remarks, Eric, before we close out the show and the year on Biotech Hangout?
No, despite some of my curmudgeon-y, Scrooge-driven comments based on maybe fatigue, I'm an optimist. I do think that we're going to have a good 2026 ahead, and that the innovation in our industry is almost unstoppable. So